Hi and welcome to Trade of the Week. This week's long bet on the S&P 500 was a classic bounce off an existing support line. The 1040 line had held firm on two previous occasions in August, but was under threat when UK traders returned after the bank holiday weekend. The early trade continued Monday's decline, but noticed a candle pattern forming, a series of hammer and doji candles reflecting buyers each time the market fell near support. By 10 o'clock the market looked to be pushing higher with a series of higher lows, though at that point it could easily have been mistaken for a bearish flag. Here the simplest strategy was the most effective, opening a long bet just above the support line, with a stop loss placed just below the line. As this relies on belief in the support line holding, I'd normally be looking to get an offer as close to the line as possible. However, it made more sense to get the volatile first hour of official UK trading out of the way, especially after the bank holiday, before placing a long bet at 10.43. Placing my stop loss just below support and the day's low at 10.36 would give a risk of £280 on the £4 bet. My first profit target would be recent resistance at 10.70, selling £2 there and then running the balance with my stop loss at break even. So, did support continue to hold? Yes. There were a few nerves when the price reversed, testing 10.40 over lunchtime, but once again the candle shows that buying emerged at that level. Positive housing and consumer confidence numbers out of the US propelled the market higher, but the FOMC minutes led to an evening setback. However, encouraging growth data overnight from China and Australia ensured a positive start to Wednesday, and the risk trade was already gaining momentum before a higher than expected ISM number hit the screens in the afternoon. The index hit 1070 just after 3 o'clock, triggering my limit order, and then continued to move higher, closing at 1080. A close above 1070 put the next big level at 1100, so the idea was to run the trade into the US payrolls figure, but with a protective stop loss just below support at say 1065. This would lock in a further profit and give a free option on the big trade. Okay, so fast forward to Friday, and better than expected payroll numbers saw the index smash through 1100, closing out our trade. This trade produced 27 points on £2 and 57 points on the other £2, giving an overall profit of £840. Easy, isn't it? Well, not really. This was the right trade to make. However, I was in the other camp running a short footsie bet, which cost me dear. Have a good weekend.